Hey, hey,
Oh, yeah, there she is. Hi,
hi.
Tia.
Hey,
How you doing?
oh, I'm doing good. Hey, I'm
Hey,
trying.
Christian family.
Hey, hello, everyone. Thanks for joining us today.
I have
Uh,
to leave the screen here. Well, technically, I'm on the third of my screen, so yeah.
right. So we gotta have a couple little challenges this morning. I mean, that was the evening. So
Evening.
right, evening. Sure, not the morning. So
It's
yeah.
been a day.
So we got a limited Lisa.
Right. Only a third of me visually, but trust me, I'm all here in
Right.
mind.
Mm-mm. All right. We asked for you to share. Please like and share, and share our posts with people just to let them know that we are here. So we ask you to do that. If you have any questions, I want to see something. It says if we asked you to connect.
What you looking at?
Um, Trying to look at this link because I believe if you want to ask questions, you could click that chat.
Okay, yeah, I see it.
Because a couple of people had told us that they weren't able to chat with us. So if you're not on Facebook, you might need to click that link in order to start to chat with us.
Mm-hmm. Okay.
Yes, yes, yes. So today,
Who
we
are you?
all right, all right. Today, hey, it's me, Dion Branch, and I'm with EXP Realty, and I have my co-host with me.
I
Lisa.
would wave, but I'm holding my phone with both hands today. Sorry.
So we got Lisa White, Geneva Financial, House Money Mama.
House money, mama.
Yes. So today we're going to talk about refinancing your home, right? Like,
Okay.
should you do it? Why should you do it? When should you do it? A lot of people are. This is a good time. I heard, at least I'm hearing like the interest rates are so low, and a lot of people, we've probably purchased maybe even 20 years ago, right? You might purchase 10 years ago, right? Or you could have purchased, was it like 6 months ago, and you need to refinance your home. And so let's get an understanding, like, what is all this financial terms that we we don't understand? Why should I
Right.
refinance? What's the benefits of refinancing? I think that as homeowners, it's definitely something. It's an advantage that you can take advantage of. Something you can take advantage of.
Yeah.
Definitely. So, what is refinancing? Like people may not know what that is.
Yeah, that's fine. I think that's a great place to start to just really kind of give a definition, right?
Mm,
Um, and just like the word implies by, what it sounds with being again, and finance, when you put the money on the house, get the money for the house. So that's really all you're doing. You're getting money for your house again. But then it's a couple of different ways and reasons why you would do that. So obviously you finance your house when you first purchase it. You need to get money to actually buy it. So the bank, the mortgage lender is the one that provides the money. But then if you're thinking about refinancing or financing it again, then it's a couple of things. One, I thought I should probably mention, for some reason, people think that you can just refinance with no kind of benefit, like for any reason. Well, I just want to refinance my house. Well, we as mortgage loan originators, we actually have some standards that we have to follow in order to make that happen. Like for example, back in the day, people just used to, use refinances as a way to get an additional commission, because
Right.
obviously we are commissioned employees. And so anytime we do a transaction, there's going to be a payment off of that transaction. But one of the cool things that I did like about Triad actually was that they changed some of those rules to make it, they gave like these tests that we have to do. I would do them anyway, even before they started them, because to me it doesn't make sense, to have somebody refinance and they don't get any kind of benefit out of it. So
Okay.
there has to be some kind of a benefit. So, for example, one benefit could be that when you refinance, you do something that they call rate and term refi, which basically means that you have an adjustment to either the interest rate or or the term, which means how long you have your mortgage loan for. So, contrary to popular opinion, there's more than just a 30-year mortgage loan.
Right.
They come in 30 years, 25 years, 20 years. You can do a 15-year. You can even do down to a 10-year mortgage if you chose to do so. Keeping in mind, of course, that the smaller amount of time that you have the term of your mortgage loan for, the larger amounts that your monthly payment is going to be, because you're still taking, like, say for example, let's just say a $300,000 loan. That's what you finance on your house. When you finance that amount, if you pay that amount back over a period of 30 years, then the amount that you pay per month is less than if you only pay it back over the, term of say 10 years. This is going to be a drastic difference in how much your monthly payment is going to be. But so people can't get a benefit to changing either the rate, the interest rate, which is usually what most people are looking for, because obviously if you keep the same term that you have, but then you change the interest rate to something lower, then you get a benefit out of that because your payment will likely be lower.
Okay.
Um, but sometimes changing the term can be beneficial for you as well, because even though you pay it off in less time, you actually save interest because
Right.
they can't charge you interest on principal that's not there. So when you have a shorter term, all that principal is put into that smaller interest rate over a shorter amount of time. So that can be something that's beneficial to you as well. So for something like that, that'd be one of the reasons why a person might refinance, because they want to change their interest rate, maybe get a lower rate, or they want to change their term. Um, a case where somebody may not necessarily be looking for a lower interest rate might be like a cash out refinance.
Mhm.
So let's say I've been in my house, for the past, I don't know, 10 years. I've been paying
Right.
my mortgage faithfully on time every month. And so now I've built up a little equity. We know equity basically is money, a value that you have in your house that's kind of like a cash value, sort of like how an insurance policy is. You know how what is that, a whole life policy? If you get a whole life policy, you actually build up cash value in that policy, and you can
Right.
borrow against that money that you have in your insurance policy. Where a house, a mortgage is the same way. So
Right.
as you
So
build up, go ahead.
yeah, so I was gonna say, like right now, properties the value of your neighborhood is probably going up because houses are
Mhm.
selling for more money. So
Yep.
an example of you having more equity in your home is, so now the value of your property has gone up, and you're able to actually refinance and maybe be able to pull some of that money out. Say, for instance, now you may have bought it for 150, and maybe the neighborhood has gone up and your house is now worth 200,000. Yeah.
Mhm.
Right. So that's, so now you have some additional equity in your home. Mhm.
Exactly. And plus you've been paying off your mortgage. If you've been in your house, like the example I just gave, you've been there for 10 years and you've paid some of that loan down. So that actually now kind of counts as equity too, because that's part of the loan that you no longer owe. So the closer you get to not owing anything on your house, then obviously the closer you get to 100% equity, where it's basically just all profit. Some people talk about houses as being whether it's like an asset or a liability. And I kind of think of it as being a little bit of both, because if you think about it, when you first buy a house and you owe money on it for 30 years, that's probably not a really huge asset.
Right,
It's
right.
probably a little bit more of a liability when you first get it, but as you pay on it, and you have more value to it and everything, then it does become much more of an asset than a liability, because now you have something where you can pull, like a credit line almost, that you can pull funds from. So that's definitely an asset. It's like having money in the bank.
Mhm.
Yeah, definitely. If you have equity, then now you can pull some money out of the house. And that can be one of the things you do, like a cash out refinance. So you could do limited, just a small amount. You can actually even get a little bit of cash, a couple $1,000s back on just a rate and term refinance too. A lot of people don't know that. They just assume that either you have to come to a closing with money or that you don't get anything back. But I just actually completed a refinance for, that was a just a like a rate and term. It wasn't a cash out. So excuse me, she was able to get a little bit of money back at closing.
Oh,
Um, yeah, because they do limit it, but you can't get a small amount back.
right. And this is a good thing to do when you want to like update your bathrooms, things
Hmm.
like that. So you want a new kitchen, maybe you might want to pull out some equity in, from your finance and do refinance, and then that way you can do an updated kitchen,
Yeah.
updated bathrooms, things like that. And then that helps you later on, say for instance, maybe down the line you planning on selling, then maybe you could now you have updated, and that gives you actually more value for your home,
Mhm.
right?
There
Hmm.
you go. Yep. Well, I'm not an appraiser, so I can't really speak on that part, but
Right. Well, our appraiser already told us we need to do something in the basement. You need to fix your basement and put a
yeah,
bathroom down there, and you
there
need
you
to.
go.
Right, and then I think he also told us the bathrooms upstairs. I don't know if he told us the kitchen too. I always throw in the kitchen. I don't know if he said it or not.
Right. I think you be throwing that in. I don't think that's what the appraiser said.
Right. Look at the back episode on the appraiser. Hey
Right.
Valerie. Hey Valerie, how you doing? Thanks for joining us.
Right. How you doing, Sister Valerie? So yeah, that would be one of the things you could do with the cash that you take out. You really can use the money for anything though. I mean, like right now, things have opened back up. People are traveling a lot and stuff like that. If you got a house, you got some equity, take that money out, you can take a trip.
Yeah,
Okay. I
yeah,
mean, fix your bathroom if you want to, or add a bathroom to the basement, like Dion said. But you could also, use that money if you just want to take a family vacation or something like that. It's not really a limit to what you can do with the funds.
yeah.
So it's not really a lot of limits, but you can pretty much use the money for what you want. So that's the cool thing about being able to do that cash out refinance. What else? Oh, so let me think. We
So
talked about
I
cash
had
out.
a question for you. We were talking about I kind of mentioned this before. I got a friend asked me about getting rid of his PMI. And
Yes,
so that
that's
he
the other
can,
thing. Yeah.
right? So what is PMI, first of all? So for those that don't know.
Yeah, and you need to know, because if you put down less than 20% on a conventional loan, or if you just get into an FHA loan, period, you gonna get some PMI. So PMI stands
Mm,
for private mortgage insurance, and basically what it is, I think of it as an insurance policy. That's basically what it is. It's an insurance policy. It's on the mortgage. You pay it, and it protects the lender. That's really
uh,
what it is. So just the same way that if you had insurance on your car, which I hope you do, if you got a car, you need to have insurance.
right,
But you have insurance on your vehicle. In the event that you get into an accident, now the insurer steps in and they pay whatever, the damages. You pay your deductible, they pay the damages and stuff like that. So you can still be able to get your car fixed. Well, for a lender, they get PMI because in the event that you default as the borrower, now they have a way to recoup some of their loss. So they don't get a total loss when they have a loan that has PMI on it, because they're able to cash out on that insurance policy and get back some of the funds, that they would have lost for whatever their cost might have been, because it does cost money to go to court and, different things like that. Sometimes if you have a property, like say, for example, I've been learning a lot about nuisance properties. If you have a nuisance property, then if the buyer is or the owner, is no longer there, the bank is responsible. They can hold the bank liable for, like, say, for example, any kind of city fines, or
Oh,
if there's any kind of damage to the property or anything like that. So now what happened is, the bank has to pay those costs as well as, legal costs and things like that. The cost of doing business because of this loan now defaulted. So now they have a way to be able to recoup some of those costs
okay.
because they have PMI. So that's basically what PMI is for. It helps to be able to protect the interest of the lender. And I know it sounds like it's not really a fair shake, but if you think about it, more lenders are willing to do these kinds of loans like FHA because they're guaranteed and they're insured loans. They're guaranteed by the government. And because of the PMI, the insurance, a lender feels like all they want to do is mitigate risk. That's
Right,
what they're concerned about. I want my money. I want it, when you're supposed to pay it. I
right,
don't want to have a huge loss. I know it's a possibility to have a loss in business, but I don't really want to incur a loss. So they try to do everything that they can to avoid incurring a loss. So this actually helps with that.
right.
So
So can you
PMI, I'm sorry, go
get,
ahead. Your
so
question.
can you refinance to get the PMI off?
Well, yes, under certain circumstances. So you can't, if you, we talked about value just a couple of minutes ago in regards to, the property now being increasing and what they're worth because of how things are happening in the current market, because we are in a seller's market. So say, for example, you bought your house, let's just say 5 years ago, and
Hmm.
you put aggressively into it, and your value went up significantly on your home. If your home is past the 80% loan to value, if it's underneath that now, you can have the PMI removed. Now, this is only for a conventional loan. FHA, they don't play that no more. They used to, but they don't do it anymore. FHA, about maybe 6 years ago, I want to say, they changed their parameters. So now for them, PMI is on your loan for 10 years,
Okay,
regardless. So
regardless. But then does it why go off, or do you have to
after
do
10
something
years,
after
after
10 years?
10,
It does go away.
yeah,
And
after 10
so
years
that's
for
for
FHA.
the FHA. And then for
Right.
conventional, it will go away after 8 years. Is that what?
So for conventional, they're actually, here's what I would suggest, because they're actually supposed to kind of have a barometer for this to keep up with it for you, because when you get to a point where that 78%, the 79%, you're underneath the 80% loan to value, they actually are supposed to be able to taking that off. They're supposed to be sending you a letter letting you know that there's going to be some adjustments made on your mortgage. Now, what I would do, because of the fact that we are now in an inflated market, I would maybe, get an appraiser or get a realtor, somebody to come out. An appraiser would be better because that's more
Right.
reliable. That if you get an appraiser to come out, that's going to be market value. It's not a comparative market analysis, I'm sorry, like what a realtor would do. It's much more official if you pay and have an appraiser come out. So if you get it appraised and you see that the value, your loan to value, and here's how I learned loan to value as a mortgage loan originator. It's just a simple division problem. LTV means loan to value, which the math problem for that is loan divided by value. So whatever your loan amount is, like say you owe $100,000 and the value on your house is $200,000. Well, now you divide that 100,000 by the 200,000, and that's how you get your loan to value. It makes sense.
Okay.
Yeah.
So, but can I refinance it off at all? Like, so you telling me I can't do that?
You can do it at 80, and when you're underneath 80%, yes.
Oh, that's so I could refi to get. But I thought you were saying that it'll just come off automatically.
They would do it for you automatically. That's how it's supposed to happen. They would do it for you automatically if your value has changed. Like say for example, they normally kind of they normally do like a projection at the, so when you look at your loan papers, you're going to see like these projections for, how much you've paid into the loan, how much is still due, how much is going to principal, how much is going, to
Yeah.
escrow and things like that. They do a projection for the whole 30 years, all 360 months. They do a projection for that. So they normally have a point in time where they project that you will have, completed the loan to value would be different just based upon loan being paid down and stuff like that. That's why I'm saying what I would do, I would actually check into the value of the home because I
Mhm.
think that's a better thing to do. Then if your value is different, then it would make sense when you refinance. Now you can get the PMI off because now the value has changed. Another
Okay.
thing you may be able to do, now don't quote me on this one because I think every lender may be a little bit different, but you may actually be able to contact your lender and let them know that there's been a significant difference in the value of your home and you would like them to evaluate it and see if they will, just take the PMI off. Now I'm not going to guarantee they'll do that. They don't have no choice if it's a refinance because you'll have an appraisal done and that appraisal will show what the value is for current market and they don't have any choice but to go the numbers. You can't play with the numbers. This is
Okay.
no arguing with those numbers. But you might even be I'd rather try than not.
Exactly right.
But you know
So this
me, I'd rather try. You're gonna have to tell me no about 5 times.
right. So this is a good time because so the interest rate isn't at 2 anymore, but it's about 3.
We
And so
still in the threes. Yeah.
yeah, we're in the 3s still. And so some of us have probably purchased a house. Like I know I purchased our house 20 some years ago. Uh,
Uh-huh.
although we've refinanced since then, but you might, if you haven't, or it might be something that you should really look into. It definitely to bring down your monthly payments.
Right.
uh, so Janita has a question for us. She says, how often can you refinance?
So I really would make it a habit of refinancing because again, you want to make sure you're getting some kind of benefit out of it. Now, obviously, it makes sense if you had the value of your home go up, it increased, and so now you can take some money out. That would be a benefit to you. Another thing that might be a benefit is a lower interest rate, but you're not going to be able to refinance if you just either purchased or refinance within the previous 6-month period.
Okay, okay. Now sometimes I've kind of felt like when you refinance, you kind of take on some additional fees. And so then that could kind of make it like it's not wasn't really worth it.
Well, again, that depends. So there's always going to be fees on your loan. We don't do loans for free. So
Mm,
those fees are on a refinance. That's one of the things that's kind of cool about a refi is that you can roll those fees into the body of the loan. So like say your refinancing fees came up to, I don't know, $1,200 or something like that. You can actually roll that $1,200 into just being a regular part of your loan.
okay,
So it's not most of the time when I do a refinance, I try to structure the loan so that my customer is not coming to the table with any money. I think it's better if you can come to the table on a refinance with no money out of pocket. If anything, I'd like to give you something back if that's possible. But even if you're just doing the rate and term, my goal will always be for you to come to closing with no money, preferably to leave the table with a small check, whatever is allowable by the parameters of that specific loan. But yeah, for a refinance, you want to look at is there a benefit to it? It has to be some kind of a tangible benefit to the customer because if it's not, the underwriter is not going to approve it anyway.
okay, okay. All right. I think
That's
another.
that question, Janita.
Thank you, Johnny. Right. She got another one for us. Let's see. Um, is it beneficial to refinance in this seller's market?
I would say yes. I would say
Mhm.
yes for two reasons. One, because so let me just give you a little bit of an idea of what interest rates used to be like. When I first started in this business in say around 2007-ish, right before the crash, right? That was really smart. But anyway, when I first started, a typical interest rate on a purchase loan was 8%. 8%. That was the norm. That's what people were paying for, 150,000, 250,000 house. That's what they were paying. And
Yeah,
now a typical interest rate is like 3.5, maybe 4% on a purchase loan. So that's a huge difference. When people talk about the interest rates being historically low, they're not lying. They really are. They have not been, and especially on a 30-year mortgage. Last year, I wrote a couple of mortgages on a 30-year that were in the twos, like 2.5%, 2.625% for 30 full years. That's excellent. And
yeah,
even though we're not in the twos right now, but still to be able to get a 30-year mortgage at a 3.5%, that's still really good.
that's still
So
good.
if you
Hmm.
yeah, if you right now you have the ability to borrow that money out of your own, take that money out of your house and only pay, like, say 3.5, or let's just say 4%. You can't beat that with a stick, because if you think about it, if you go to your bank to borrow that same money, just go to your bank and say, hey, I want to take a personal loan. They're probably going to charge you what, 6, 7, 8, 9%, depending on your credit. And for us, a 600 credit score, you can still get a 3.5% interest rate. Like, it doesn't matter. You know what I mean? So I would say yes, it is beneficial right now. If you have equity, if you want to take money out, or even if you just want to get a lower interest rate, because some people bought a house, 5, 10 years ago, or even 3 years ago, when interest rates is in the fives, and now
Yeah,
interest rates are in the threes. So the interest rate being in the five, being in the three, can make a difference on your monthly payment.
yeah, yeah, definitely.
Mm-hmm.
I saw, I do want to talk about a little negative, and we just got to kind of watch ourselves, because and we got to watch our parents and things, because I went to Inglewood. How guy was going to sell his home, and
Mm-hmm.
so then I had to do a market analysis of his house to see
Okay.
how much I could sell the house for.
Okay.
So I thought the house was paid off in full, but then, doing some research, I found out that he had recently refinanced,
Okay.
and they had given him so much more than what the value of his house was. So at that time, he really couldn't even sell, because the value of his home, how much he owed this other company.
Mm-hmm.
And I had been noticing that, sometimes some people will come knock on your door and say they you could refinance, and it's like a scheme for you to fall behind on your mortgage so that they could take your house.
Wow.
Yeah, so not sure, because that's basically, he said the people just knocked on my door. I'm like, yeah. So my
I don't really know any reputable loan officers that are going door to door. If they're really in the business and doing business, they probably doing, how most people are doing business nowadays, by phone, internet, things like that. I think it'd be very unusual for a loan officer to come knocking on your door.
yes.
That blows me.
That's right. And so as he told me the story, I just was so concerned, because he's like, oh, a couple of people on the block have refinanced with this company.
Mhm.
And property in some areas are very important, right?
Mhm.
We know that people are trying to come in. They're looking to take over some of the neighborhoods, some of our good neighborhoods, and convert them over. And this is a way of doing it.
Yeah.
So, whereas if we're talking here about refinancing, make sure you're using a reputable company, right? Make sure you're using reach out to us if you don't want to use House Money Mama. We got
But go ahead.
right. If we can't use Lisa, I I give you somebody else, but you have to twist my arm like right.
Right.
Right. So Janita said, "Oh my God, I get something in the mail every week suggesting I refinance."
Yeah. So now the big companies will do that a lot. You
Right.
see, like, stuff from Quicken Loans, Rocket Mortgage, different things like that, where they send out things and try to. It's basically just that's how they have the kind of advertising budget to be able to do things like that.
Mhm.
Most of the times, though, whoever you probably purchased with or maybe refinanced with before, they may just check back in with you because of the fact that mortgage rates are still pretty low. They're really low. I mean, I don't know how long we're gonna ride this out in the threes, but I'm hoping it's for a little while.
Yeah,
Because people can't take advantage. There are still people that have interest rates 5% and higher. If that's the case, you really should be thinking about because a difference between a 5% and the 3.5% could be a couple of $100 in your monthly mortgage payment.
right,
So, and it doesn't hurt even to just check it out. Give me a call, send me an email, message, a text, whatever. Say, hey, I'm thinking about refinancing. I want to know if it'll be worth it. We can do a little scenario. We can go over, what do you think your house is worth? How much do you owe? What are your taxes? Things like that. And I can play with those numbers and put together a scenario for you because, again, I'm a reputable lender. It's got to make sense. So if it makes sense,
right.
if it doesn't, I'll tell you that too.
Hmm. So we have Lisa's number there. If you want to get in contact with her, definitely give her a call. She can give you some information about refinancing your home.
Yes.
Yes. If you're thinking about selling your house, you can give me a call. I can help you. I can do a market analysis of your house, tell you what your value of your home is, and we can see what your house is worth, on the market. So definitely something that we both can help you with.
Yes.
So, any other questions?
I
Uh,
think everybody.
yeah, I think we got everybody.
Those
Uh,
are good questions today, ladies. Thank you.
Thank you. Thank you for joining us. We look forward to coming to you all each week with some important topics. We want to make sure that our customers, our friends are educated on purchasing the house. Make sure that you share our posts, like our posts. Let everybody know that we're here every Wednesday at 6 p.m. And you can always join us on our in our Facebook group, which is called Water Cooler Wednesday, and there you can post and ask us questions anytime. So
I'm,
definitely,
we need a theme song for Water Cooler Wednesday too, because I already got
I
house
know.
money. Now we need one. What you mean? No.
I said I know, right? I said I know, right? So we could come in with a theme song. So right, I know we got some. I know we got some people out here that could give us a theme song. Give us a theme song, y'all. And let's thank you, Uppity Zeta, for the comment. We appreciate you checking in as well.
Yes.
Yes.
Yeah.
Mhm.
Everybody, y'all have a great night.
Right. Good night, everyone. Thank you.
Thank you.